So a lot of people say that 9% drawdown is too much to come back from in a prop firm challenge. I personally don't believe this because I've come back from it, and I'm going to show you how. Here's my balance and equity curve for phase 1, which I traded from December 2023 to January 2024. And here's my curve for phase 2, which I traded from January to February. As for the live account, here's how it looks right now. And what's nice is you can see all the analysis about how you trade. So people who are really into statistics will appreciate this. All that's there in the dashboard. So right now, I'm just waiting to request my third payout. So I'm just going to go over the major trades from phase 2. To keep it simple, I'm showing the 15-minute chart, and I've marked out the positions I took. So there's a green rectangle, a yellow rectangle, and then this gray thing here. So the green represents London session, the yellow represents New York session, the gray represents Asian session. On the right side of the screen are all the assets that I typically monitor, so I'm going to go over some of the trades on them. I would typically just trade NJ, GA, EU, and indices. Alright, so with NJ here, I thought this was a rising wedge, but it turned out to actually be the start of a bullish move, so I lost 30 pips right there. So looking out more to the left, I saw that on Wednesday we were reaching a high of the week. So typically a high of the week is reached on a Tuesday, Wednesday, or Thursday. So I thought that there might be a push back down, seeing that there was some imbalance to be filled. While the trade went in that direction, the stop loss was a bit too tight there. As you can see, Asian high took it out before price went in my direction. By the way, here's a list of all the trades that were taken on this phase 2 account, just in case you're curious. So Sunday of the next week, I anticipated that we would push up to take out this 1.27 extension. We actually then went back down into the middle of last week's range. So that's how I got another loss. So then looking to continue with that bearish momentum, I thought we might take out Monday's Asian low and then go deeper into this significant daily low. So I took this position overnight. And so by the time I woke up, I was already out. Price didn't get back down to that daily level. That's the danger of taking these overnight positions. You might end up losing, but you also can end up winning. So I left NJ alone for some time. And then going into February, I saw that there was a week starting out. Monday and Tuesday, there was a double bottom, but the Tuesday low was a bit higher. Wednesday, we continued to push up. So then I decided that I would take a buy during Asian session to see if we could get back to this high, which is a significant daily level. And it's actually a level from December of 2023. So we can see here that there was a high during Asian session on one of the days in December. So I marked that out for future reference. All right, so price got there, took it out on Friday. Next week then, looking to retest that area, took a buy on Monday, looking to see if we'd stay above this wick here. And we got back into that area, took a bit of profit there. So looking at GA now, Monday we had a high, and I thought we might get higher and reach this Asian high from the previous week, but we didn't. Instead, I got stopped out. Sometimes when you have a trend line and you get 3 hits on it, then you might be seeing some bullishness in the future. So here's 1, 2, and 3. So I thought that might boost price back up, but instead we went down. So then starting up the next week on GA, I expected us to get above the Monday high. Tuesday we went lower during London session. So I took the buy during New York session right after the open. Thought we might just push up, but instead we actually got stopped out. You know, the beauty of this is that everyone trades differently. I remember watching this one instructor and he was saying that there's like this diamond pattern. So whenever price forms a diamond, you can expect an explosive move after. I guess that's somewhat true if you want to go with that. I guess this is like a bullish diamond. I don't know. Price shot up. Pretty much was bullish the rest of the week before retracing on Friday. And the next week, I was expecting to push past Thursday's high. And so I tried to take a buy. But to open the week, sometimes price goes in the opposite direction of the trend. So I thought we might get this high, but instead we just kept pushing lower. So I got stopped out there. So these two trades are really a lot of what got me into that minus 2% initially. So seeing that we then pushed above Asian high and retraced, I thought there might be a good chance for a buy, keeping the stop loss below the wick of this low. So that was how I was able to get a significant amount of profit there, looking to get around the high from the previous Sunday. Now this was already on a Thursday, but I thought we might extend that bullish move even higher for Friday, but no, we retraced to get back down to around Asian low of Wednesday. So that's how I lost a lot of that profit. All right, so the icing on the cake was in the next week. So started out bullish on Monday. Tuesday there was a high, then retraced all the way back down and left a large imbalance. And so I thought there might be a push back up before going back down, but instead we actually just continued to go back down. So during Asian session, I took a buy, looking to target that imbalance, keeping the stop loss below Monday's low. We went right through that. So in terms of losses, these were pretty much the losses that got me all the way down to minus 9%, combined with some of the trades on the indices. So to make that clear, I started out with a balance of 100,000 US dollars. And by the time I put in all these trades and closed them out, I was at 91,000 left. At that point, it was really about trying to find a way to recover while taking smart positions. I left GA alone for a while till the end of the month. We saw that there had been bullish moves, but they weren't really sustained. Looking towards the end of the month, there's typically big moves in one direction. So Sunday started out at bullish into Monday, retraced on Tuesday, and then during the New York session, there was a large amount of imbalance formed this candle, 10:15 a.m. It was then filled partially with an Asian low forming later on Tuesday. So because of Asian session low being higher than London session low, I thought we might go bullish past the previous Asian high. I'm looking to get into this 0.2618 to 0.3618 of that wave 2 move. Wanted to see what would happen, and I was looking to target that area. As I saw price play out over the course of the next day, I entered more positions, so that's how I got a significant amount of that profit back. So EU now in January, Thursday was going bearish. Then there was a daily level that price might have been able to tap into, so I set a buy limit around that area with a stop loss a little bit below it, but not quite to the next level, to take profit around the Asian high. So that was some profit right there. Then the next week, I was looking to see if we could get back into this area of wicks that had formed on Friday. No, instead we didn't. The stop loss was a little bit below that daily level for safety and got taken out. Now the same week, Monday we formed a low, Tuesday there was a bit of a higher low, and then Wednesday there was a chance to get back up into the previous day's high. And so what I was thinking was, because there was a high from Friday, we might get around that area, but wanted to keep the target a bit lower than that area so that if we didn't get there, I would get the profit. And so during New York session, they took that right around the 8:30, 9 o'clock range, took 30 pips of profit right there with the bullish momentum. And later on in the week, because there was this low from Monday and we had been going bearish, I thought we might get past this Asian low. Looking to the left, there's a lot of essentially nothingness that still had the potential to be taken out. And so I thought to take a position and enter this overnight. And by the time I woke up, I was already seeing that we were way higher than I was expecting price to be. It would have been nice to have taken profit if I had set the target a bit higher, but I didn't. But by the time I got up, we were looking bad. And so instead I kind of hedged. So I woke up, saw we were bullish, and took a buy. I took that buy right up to around the previous daily level, thinking that we would get above, and got a profit. That was a mix of loss and profit. Okay, so then the next week, there was this imbalance that had formed on Monday during London session. I wanted to see if it will be retested. It was just a matter of when are we going to get into the position. So Monday and Tuesday, the lows are pretty similar. During New York session, there was a push upward with an imbalance that was wicked back into. And so that signified to me there's bullish momentum. So I took the buy to around that area of the imbalance, almost 40 pips right there. All right, so US 30 now. Towards the end of January, there was a lot of volatility. So I wanted to get a piece of that action. So with the indices, the timing is a bit different from trading view perspective with these indicators. So the green and yellow don't actually represent London and New York session respectively. This is around 9:30 a.m. New York open. There was a big push down. And I just wanted to see a retest of that imbalance that was formed. Took a quick buy, was in and out with this huge candle. Usually I feel like it's pretty safe to just scalp the indices. You never know what can happen. Price can wick you out real quick. So here's just a matter of seeing some upward consolidation and then trying to take that wick entry because there was imbalance that had the potential to be taken out. So looking at this imbalance formed by the bullish candle, I put the target a little bit beneath it, and that's it. So looking at the start of a new month, Monday there was a high, Tuesday there was a new high, and Wednesday there was a new high. So after that new high was formed, I was looking to see if we could get back down into this imbalance from Tuesday. So after there were a few wicks around here that were taken out, I took a sell position. Price did go a bit higher, but it didn't get to my stop loss. And I took that sell right back down to that area of imbalance. So Wednesday low was formed. Then Thursday, I was looking to see if we could find some momentum. So there were 3 bullish candles that were formed. I entered off of this wick here and took it right up to the high of these 2 equal highs. I sat out for a while as I was accumulating losses. And then I looked to see if I could enter off of another imbalance that was formed. So there's a quick move down. That imbalance, I looked to enter around the 61.8 retracement, and I got into the sell there with the entry a bit below that wick, looking to get below these equal lows. So we continued throughout the days. Wicks and imbalances, I tried to get in on them. Here we had another imbalance that was formed. Tried to get in on that wick and tried to clear this other area of imbalance, which was very tiny, but marked around there for the target. Looking into the rest of the week, then seeing that was Thursday. Friday, we continued to extend higher, so I wanted to see if I could get in. So as we continued, there was this area of imbalance that was filled by a couple of wicks here, and so I took the buy off of this bullish candle because I was looking to see if I could ride that momentum up to around the 38,700 level. Took profit a bit below it. So the next week, Monday and Tuesday's highs were pretty similar to each other. I wanted to see if I could get in on some of the selling action on Wednesday because there was a creeping movement to the bearish side. So I took a sell and was taken out actually in profit. All right, so NAS. One of the biggest losses on this account came from NAS. So I was wanting to see some push back down into 2023's prices because 2024 was starting off so bullish. But instead of price going back down into some areas of imbalance I was looking at, we instead pushed higher. And so I held onto this bias for way too long. And that's how I lost a significant amount right off the bat. So then seeing that we were bullish, there was a high Wednesday, Thursday, the high was a bit lower. And so I was thinking this was just a retracement for us to go higher. So I entered a buy during US afternoon, expecting to revisit Thursday's highs. Well, that happened, but after price went down further first to around this daily level. So that was fine. And looking towards the end of the month, I wanted to see that end of the month bullishness. So as I saw there was a huge imbalance that was forming, I wanted to see if I could enter off with a retracement to get back up to that area. So I entered a buy a little bit below what was essentially the New York opens low, keeping the stop loss a bit wider just in case there was a bit of a deeper retracement. And then the real point was to target this area of imbalance. Yep, so here's that area of imbalance, and we got right into it. So I stayed out of NAS for a while until I saw we were pushing lower towards the end of February. Because we've been going higher, I was expecting some type of retracement to happen. Monday, we tapped into Friday's imbalance area. We went lower on Tuesday, then went up a bit, and then went back down on Wednesday. Again, Tuesday, Wednesday, Thursday being days that are potential candidates for highs and lows of the week. I wanted to see if I could get some type of jump on that action back to the bullish side. So I entered a buy around the 17,450 level and wanted to ride that up just into this area of imbalance that was formed on Tuesday. So here's what I mean by that area of imbalance. So we tapped right into that and I got out. I don't know why there's a gap. There wasn't a gap on my chart. I think that's just something that happens with some of the brokers on TradingView. So I stayed out in NAS for a while until the end of the month, where I saw there was a huge falling wedge, which signified to me that all these highs had the chance to be taken out. So Monday, there was a low. Tuesday, it traced higher. Wednesday, there was a low. Thursday, price went lower. Then there was this huge imbalance. So looking to see if that meant bullishness. Well, we pushed low back into that area with another bearish candle. But that bearish candle was followed by a bullish candle, which then signified to me there was some bullishness. Let's get above these wicks here. And so that's what I was looking to target. And that's how I was able to pass the challenge, this very trade. So this firm I recommend. They have good customer service. They have a variety of account sizes you can try out. They also offer free trials, which I think is a great added bonus. If you have any questions about the evaluation process, how it was, or really anything related, please let me know in the comments. And I'll catch you in the next one.